Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q3 2020 Results Conference Call. All participants are present in a listen-only mode. Following management's formal presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press *0. As a reminder, this conference is being recorded November 24th, 2020. The recording will be publicly available on TASE website. With us online today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda van der Walde, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference is not a substitute for reviewing the company's annual financial statements, quarterly financial statements, and interim report for the third quarter of 2020, in which full and precise information is presented and may contain inter alia forward-looking statements in accordance to Section 32A to Securities Laws 1968. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepting accounting principles. Such non-GAAP measures are not intended in any manner to serve or substitute for our financial results. However, we believe that they provide additional insight for better understanding of our business performance. Reconciliations between these non-GAAP measures and the most comparable related GAAP measures are included in tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the English Maya website and in the investor relations portion of our website at https://ir.tas.co.il/English. Mr. Zeev, would you like to begin?
Good evening, Israel time to everyone, and thank you for joining us. Today, we are concluding another quarter of growth and significant increase in TASE's revenue. The results point out that our revenue is well divided between several income sources, which indicates our strength and growth potential. The growing demand for our products and services is well reflected in our quarterly results. The large volume of government bonds issues, along with capital raising by the business sector, indicate the fundamental role of the Tel Aviv Stock Exchange in the Israeli economy. As you know, one of our main strategic goals is to integrate between Israeli high-tech and the Israeli capital market by encouraging high-tech corporations to join TASE. In the light of our vision, we have introduced new investment vehicles such as R&D partnerships and a novel offering procedure tailored to this corporation, such as a global IPO via a book building mechanism. We have also cooperated with the Israeli Innovation Authority to encourage institutional investors to invest in high-tech companies. Our response to the demands of the high-tech and R&D market and the creation of a supportive ecosystem for this corporation is bearing fruit. The high-tech and R&D market is showing great interest in the Israeli stock market, and this interest is reflected in a chain of recent IPOs as well as pending ones. Since the beginning of 2020 and until today, we had 15 IPOs on TASE, of which 6 performed an IPO in the third quarter of 2020. Based on prospectus draft submitted to the ISA and TASE, 30 additional corporations, most of which are high-tech companies and R&D partnerships, are in various stages of working towards IPO. Alongside our efforts of promoting the primary market, we have strived hard to increase liquidity on our secondary market. In this respect, another important milestone in our strategic plan had been the Central Blockchain Securities Lending Pool. I'm happy to inform you that on November 2nd, we launched the Lending Pool platform. A few bank members and all of our brokerage members have already joined this platform. Institutional investors have also expressed great interest in the platform, and we believe this is a positive indication. As part of our vision to reach out to new audiences in the Israeli capital market, we intend to launch in mid-2021 a new service for the listing and clearing of investment units in private investment funds and alternative investment products. Within the framework of offering a broader and diversified range of contemporary indices products, TASE has joined the world's leading exchanges and is launching 2 green indices. The first one is TA125 Fossil Fuel Free Climate Index in cooperation with the leading environmental organizations in Israel. And the second one is TA Cleantech Index, which comprises shares of 12 renewable energy companies. As already published, we have reached an advanced stage of negotiations for entering into a memorandum of understandings with the Abu Dhabi Securities Exchange, the first Arab exchange expected to enter into a commercial relationship in Israel. One of the key purposes of the MOU is to explore potential opportunities for collaboration. In addition, we have just announced that TASE is conducting negotiations with a group of investors for the promotion of a joint venture for the development, installation, and maintenance of a trading system in securities based primarily on know-how and technology in possession of TASE for a foreign corporation designated to engage in the management of a stock exchange in Ukraine. As we announced, TASE and the investors are in contact with the Ukrainian securities regulator regarding this venture. I would like to clarify that the foregoing venture is still in the stages of inspection and negotiations, and naturally its realization is in essence a forward-looking statement which is prone to uncertainty. And now, I'd like to hand you over to Mr. van der Walde, who will continue with a review of the third quarter results.
Thank you, Itai. Good evening, everyone, and thank you for joining us today. I am very pleased to participate in our earnings call. I will begin with slide 4, which shows some of the key highlights from our strong results for the third quarter. Our revenues for the third quarter of 2020 increased by 9% compared to the third quarter of 2019 and totaled to 72 million shekel. Adjusted EBITDA for the third quarter of 2020 totaled 19.4 million shekel compared to 17 million shekel in the third quarter of 2019, an increase of 13.7%. Financing expenses in the third quarter of 2020 totaled 0.9 million shekel compared to the financing income of 3.1 million shekel in the third quarter of 2019. The transition to financing expenses in the third quarter is due to a negative yield on the company's investment portfolio comprising Israeli government bonds. The adjusted net profit amounted to 5.6 million shekel, a decrease of 22% compared to the corresponding quarter last year. After going over the highlights of our financial results, let's take a deeper look at the composition of our revenue and expenses. Let's go to slide 5. Our revenues from trading and clearing commissions increased by 10% compared to the third quarter of 2019 and totaled 31.1 million shekel. The increase between the third quarter of 2020 and that of 2019 reflects the higher trading volume on TASE following the COVID-19 outbreak. The increase occurred in the following trading venues as follows: equity 29%, corporate bonds 12%, and derivatives 3%. Our revenues from listing fees and annual levies increased by 10% compared to the third quarter of 2019 and totaled 14.9 million shekel. 4% of the increase resulted from vetting fees in light of the growth in the number of submitted prospectuses. 4% of the increase resulted mainly from new services and from increase in existing fees, and 2% of the increase resulted from revenue recognition in respect of listing fees. Our revenues from the clearinghouse services increased by 8%, totaling 14 million shekel. 5% of the increase resulted from an increase in existing services rendered by the clearinghouse members, and 3% of the increase resulted from new services to companies. Our revenues from distribution of data and connectivity services increased by 13% compared to the corresponding quarter of 2019 and total 11.7 million shekel. 8% of the increase reflects the implementation of the information usage model initiated in early 2019. 3% of the increase resulted from charging business customers for data previously distributed free of charge, and 2% of the increase resulted from connectivity services, co-location hosting services we launched in 2019. I will now discuss our expenses in the third quarter of 2020. Please go to slide 6. In the third quarter of 2020, our adjusted expenses totaled 63.8 million shekel compared to 59.9 million shekel in the corresponding quarter of the previous year, an increase of 6.6% year over year. The expenses related to employee benefits increased by 6% and totaled 35 million shekel. The growth in the expenses reflects a reduction in the utilization of vacation days in the quarter following the coronavirus outbreak and the annual salary raise. Marketing expenses increased by 54% compared to the corresponding quarter of the previous year and totaled 2.7 million shekel. The increase is a result of the timing of marketing campaign launches. The depreciation and amortization expenses decreased by 3% compared to the corresponding quarter of the previous year and totaled 11.1 million shekel. I would like now to review our financial position highlights. Please go to slide 7. As of September 30, 2020, our equity totaled 620 million shekel and comprises 74% of the balance sheet, excluding open derivative position balances from our clearinghouse activity. In addition, we have approximately 343 million shekel in cash and investment in financial assets. We don't have any financial debt. We have 153 million excess liquidity and 292 million shekel excess capital above our regulatory requirements. The excess liquidity increased by 16% from the beginning of 2020. I would like now to review our cash flow highlights. Please go to slide 8. During the third quarter of 2020, the company generated net cash from operating activities of 7.5 million shekel. During the third quarter of 2020, the company received 3.7 million shekel from a shareholder sale of TASE shares within the framework of implementing the TASE ownership restructuring. Currently, 19.1 million shares are held by the stock exchange members who received them in 2017 as part of the TASE ownership restructure. If these shareholders exercise their shares, the company will receive the consideration exceeding 5 shekel and 8 agorot per share. And with that, I will turn the call back to our moderator to conduct the Q&A.
Thank you. Ladies and gentlemen, at this time, we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the headset before pressing the numbers. Your questions will be pulled in the order they are received. Please stand by while we pull for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Hi, good evening there, gentlemen. Just several questions, but I guess to start, the backlog, the 30 or so, I think you said, that are in the prospectus stage or various stage of potentially going public. Curious if they've already declared the primary listing as the TASE, and I think in your prepared remarks you mentioned that you do get revenues already from the prospectus filing. So curious if that's you're already receiving some kind of revenue from those potential offerings.
Yeah. Hi, Dan. It's good to hear you. The 30 draft prospectus that I've mentioned, all of them refer to going public in TASE, and these are prospectus that have been admitted to us and to the ISA. Obviously, we have meetings with plenty of companies nowadays in Israel. Most of the meetings are through Zoom and WebEx, and we know that there is growing interest of becoming public. More and more companies understand the benefit. With regards of the fees, only when a company is actually becoming. You want Yuda to address it?
Yeah.
Go ahead.
Hi, Dan. How are you? Okay. So about our income, it's we can divide it for four sections. The revenue from a new company. First, we have the vetting fees that it's for the checking of the company, and this way the revenue from that we recognize this revenue in the time that we give the service, so it's on a quarterly basis. After that, we have the listing fees, and according to IFRS 16, we need to defer this revenue over the expected life of the company that will trade on the TASE platform. So we divided it for between 12 to 13 years. That is the expecting life that we measured when we adopted for the first time IFRS 15. So you can see in the details that during this quarter we have fees that we collect and we defer them. It's in the details of the revenue that we are published. After that, we have an annual fee from the new companies that in the first year they don't pay us annual fees, but from the beginning of 2021, all of them will pay a full year annual fees. So it also will contribute to our revenues. And last, the shares will traded on our platform, so we will have commissions on the trading, and that's what it's and that's the story of the revenue from the new companies.
Great, thank you. And then, Itai, you went through a host of new initiatives that have either recently launched or are in the process of coming to market. As we think about 2021 and the potential, and even thereafter, the potential revenue opportunity from these various initiatives, can you potentially size those or prioritize in terms of contribution, next year versus longer term, how you're thinking about those revenue opportunities with the new initiatives?
Well, I think that, Dan, as we discussed in the past, and also what we wrote in our prospectus, there was so much that needs to be done in the exchange, and to me that's the beauty of our business model, because it's on the primary market, it's on the secondary market, it's products, it's services, it's data, it's connectivity, clearing and settlement. And when you look at our market with so much institutional money and retail money on one hand, but we don't have at the moment proper distribution channels domestic, it gives us huge growth potential going forward. And all of the initiatives that we are conducting, none of them is being executed or instead of another initiative. We're doing all of them in parallel, and my expectation is that all of them will lead to a yearly substantial growth in our revenues. And it's not, as I told you before, a 1 year or a 2 year or a 3 year process that we see ahead. And also the fundamental of the Israeli economy, having so many promising startups that in the past they didn't approach TASE. Over 90% of the exit in Israel was through M&A transaction, not at all in the public market. And now, I think for the first time, we see that TASE has become the most relevant marketplace for those companies. And on top of it, we still see very interesting segments of our economy also coming to our market. And when we combine everything all together, we believe that we see substantial growth ahead of us for years to come. So it's not like one or two things with certain numbers that we put all the focus on.
Understood. But if I think about the non-transactional revenue and the potential profile of that growing, this 2020 included some charging of fees that for services that you weren't charging before, and so that's going to be in the full run rate next year. You launched co-location earlier in 2020, and that's now going to be in the full run rate next year. So just thinking about how a reasonable growth rate as you think about that business, if you want to just more on the data side, just like the distribution and data component, is there a framework that we should think about for what that growth rate should look like?
Well, I think, the way I look at it, it's very clear that, in the data, we should grow double digit year by year, like we did in the third quarter. And we did a lot of work of making the right infrastructure and making a very thorough job on many of the things that we are running. But I don't have the ability to estimate, what is the exact number. When we will have this discussion 3 years from now, we will have a more stable business. It will be much easier for me to give a range of the growth that we expect. But at the moment then, we have so many on our plate, so it's almost impossible, for example, in the data to say, okay, this is the range that we expect, 11 to 14%, for example. You want to add anything?
Yes. During this year, this quarter, we also launched the API products. We start for marketing them, and I believe that the connection that we made with all those customers that didn't pay in the past for our products and use them will also, we believe that they will use also the new products that we are producing now. It's not only data, it's also products of data analysis, so it's added value for our customers and investors, and we believe that this will support for the long term our growth in the data services. And I think that.
Okay. One more on the Ukraine partnership or the potential partnership that you guys highlighted. Can you talk about what that, how that would show up in terms of from a revenue contribution? Like, what are some of the services and how that partnership, what that actually will look like as you think about the capabilities you would be providing?
Dan, I will start about the revenue recognition on selling of technology. It's giving a license of usage of our technology, The first step is the installation, that it took time to develop an installation, and the recognition will be over the time of the first part of the project. And after that, there will be a license fee for maintenance and for using the technology, and this will be on a yearly basis, the recognition of the revenue.
Now, regards Ukraine, I will say then that we've talked in the past about the initiatives and the things that we are doing in the exchange, and one of the key elements within TASE was that we run our own technology. We have very experienced, talented people on different aspects of the IT with a lot of know-how and very strong infrastructure. Now, as we approach our strategic plan and we see growth in all of the aspects that we have been dealing with, we've been approached with a very interesting opportunity of setting a new market actually in Ukraine, leveraging all of the technological know-how that we have in place. Now, in a way, it's opening a new line of business for the exchange, which could lead obviously for doing business in other places of the world. But as part of the negotiation and the inspection, obviously we are running a lot of tests that rely about our ability and what it really takes from the exchange, because when you do an M&A transaction, you want the EPS to be accretive and not dilutive, and if you start this line of business, this is something that you want to bear fruit for many years. So at the moment, we cannot presume whether it's going to take place or not. We are conducting very serious discussion, analyzing it from a different aspect. I would emphasize that with regards of the quality and the technology that we run in place, we feel confident that we have the ability to do such products. But obviously, we will have to make sure that we feel that it's profitable enough before we enter such transactions.
Okay, that makes sense. I've got a couple more, but maybe I'll see if the operator, if there's someone else that wants to ask questions before I ask them. So that's it for me for now.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. We have a follow-up question from Dan Fannon of Jefferies. Please go ahead.
All right, so yeah, a couple more.
Sure.
Just wanted to see about next year from a spending perspective, if there's anything that you could that you would be highlighting. The marketing that you've seen good returns on. What's a good level of the spend should we see there, and anything else on the kind of expense side that could be somewhat larger or different than kind of the normal run rate we've seen out of you so far.
Hi, Dan. So about our expenses, we can, as we described in our annual financial statement, we have a large portion of our expenses that they are fixed, and they are including the benefits for our employees. Between the years, there is an increase between 3 to 4% of those expenses due to their agreements. It's also mentioned in our financial statement. Other expenses that change between the years, it's the maintenance expenses for computer, because we adding new systems So there is an increase between the years of those expenses, and also the depreciation and amortization increase between the years because of adding new systems like the lending pool and other new systems. So this is the figures that change between the years.
Then, as you mentioned, with regards of the marketing, we've seen good returns. We've seen plenty of new accounts that have been opened in Israel, and especially in the Israeli brokerage, which is obviously something which is very important. We are now in the process of preparation for 2021 budget. We don't see any significant change from what we had. The marketing item is one of the things that we'll have to decide, even though we are very happy from the results and the return that we've been seeing of how much we want to put it in the next year. We do see in Israel also through the media a lot of excitement, I would say, about some of the companies that are now entering the exchange, and many people are getting more independent of running their own money through the accounts, doing some trades themselves. In a way, it's similar phenomenon that took place in other countries 20 and 30 years ago. They are now happening in Israel. But we don't have any significant investment or expense that we see ahead of us.
Great, that's helpful. And then just kind of expanding upon that comment, can you talk about, I know broader retail participation is a focus, and certainly the marketing and the branding and what you guys are doing from new products is key to that. But can you talk about how that's progressing just broadly? You mentioned in your prepared remarks institutional and retail activity being up, but I was curious more on the retail side, what products or areas you're seeing that participation increase the most.
Yeah, so on the retail side, as I mentioned in the past, we've come out with an application designated for retail that they can get for free a lot of the data. They can see just by clicking all of the issuance that we have: equity, debt, primary and secondary. In the past, we didn't have any of those elements. We understood in the process that we have to invest some money in the marketing in order to get the awareness of the Israeli public from the exchange, because the perception a couple of years ago was that the exchange is mainly for rich people and not for the common people. And I think that what we did with the sponsorship of the Israeli Soccer League really helped us to change the perception. And when we look at our numbers in 2020, until the end of October, 118,000 new accounts were opened, which is a very high number in Israel, in TASE, when you compare it to previous years. And when you look at the new accounts that were opened among the non-banks, the brokerage, that number between January to October rose by 167% increase year over year. So there is no doubt that this is part of the marketing campaign that we are doing. And by bringing now very promising high-tech companies, it's very, very important, because the Israeli retail had no access to the Israeli high-tech. I know that it sounds awkward, but that was the case. And now also through the media, we're getting more and more exposure about the marketplace of the exchange is the only place that you can get, not with $1 million, an opportunity to invest into the Israeli high-tech. So this is why we are constantly talking also with the exchange members of how we can come with new products that will help them. We have some I would say, conflict with the Israeli banks, because especially the large Israeli banks do not like the competition and what is happening currently in the market. And this is a good example why not all of the Israeli banks have joined our lending pool platform, because some of them see it as a competition, where we are emphasizing that we want to enlarge the pie, we want to bring more global investors into the table. So I think that we will have more of this in 2021. But when you look at the all-time high, we have $350 billion of retail money just sitting on cash accounts in Israel. We have more than $500 billion AUM of Israeli institutions. So and now we have the companies that come into the exchange from the high tech. So I'm quite confident that everything will be in a place that we can leverage and scale up our business going forward. Ben?
It seems that the questioner has disconnected. There are no further questions at this time. Mr. Ben Ze'ev and Mr. Van der Velde, would you like to make your concluding statement?
No, nothing.
Thank you. This concludes the Tel Aviv Stock Exchange Q3 2020 results conference call. Thank you for your participation. You may go ahead and disconnect.